watching Market Movers and a lot of stocks to discuss. Before that, put up the Nifty at the day's highest point now, 7864, being clocked in on the benchmark. A lot to cheer about, 1% higher on the Nifty as we speak. And a lot of stocks on the focus today. You've got GAIL leading the charts from the oil and gas pack. Sun Pharma, as you just heard Mithali detail out, a benign warning letter from US FD, and Tata Steel as it looks to sell off its long product business in the United Kingdom. Arcom from the mid-cap space continues to gain strength from the Aircel merger talks. Aircel Wireless Business Talk, Welspun Enterprises to sell a project of Thermax, up 2% in trade as well. On the other side, we've got Geometric, Pipavav Defense and Chambal Fertilizers also on the radar. And we ask our fundamental guests about the IPOs that have listed today. Alchem Labs as well as Dr. Lal Path Labs, both making a stellar debut. What to do with them going ahead? To discuss all of this, Mayuresh Joshi of Angel Broking joins me, and Vaishali Parekh of Prabhudas Leeladhar. Vaishali, I'm going to start off with you in the Nifty right now. 7864 on the Nifty. What's the immediate resistance and support that you're looking at?
Well, we've been really waiting for this because Nifty took a while to cross 7850, 7860 levels. So I think now today the way it is moving, we are quite optimistic that Nifty should do 7950 to 8000 levels, and support still stays on at 7600.
Support still stays at 7600. Mayuresh, this up move on the fundamental side, how would you play it? Would you believe that's a sustained move up in the levels that Vaishali is talking about? Are you sort of convinced in this move up, as someone would start calling it the Santa rally, or is it too early for that?
Morning, Anupriya. I think what we've seen probably in terms of the worst, in terms of global news, with disappointments happening in the winter session, with whatever happened with the Fed hike, clearly just stated by the market. So I think I'm not ruling out a move up the late 1000-odd levels, and then structurally for the re-rating of the market's earnings and the capex cycle needs to improve, which we don't see happening in the next 2 quarters. So largely, I think a range-bound action, but yes, I think a move up to late 1000 levels is not probably ruled out.
All right, let's talk about some of those gainers. Vaishali, I'm going to come to you with the GAIL because this is a counter that since about mid of November has seen good moves, and about 25% up from the lows of November, 4% up in trade today. Technically, how's the stock looking?
Technically, it is gaining strength. So I think this becomes a good buy. Keeping in mind the support at around 320 levels, this stock is likely to do 380 to 415 levels in days to come.
All right. Mayuresh, GAIL is sort of the under-talked oil and gas stock, gets left out of the oil movement talk, and now that the subsidy drama has also eased out, doesn't really make much of the radar, but 4.5% up today. How are the fundamentals of GAIL looking for investment?
So clearly from a risk-reward perspective, I think an 8-10% move from the current level over the next 12 months is not ruled out. But clearly I think that is it in terms of how the fundamentals will pan out, at least in terms of how the financials look for GAIL. The positiveness that has probably emerged from the gas, the under-recoveries, as you're rightly saying, going down, or rather not being present at all over the next few quarters are positives. But again, I think the underutilization of their pipelines is going to be a big concern. The utilization levels probably need to improve as well. And again, I think the profitability has lagged with the gross asset addition, and that is probably creating issues on the return ratios, which might continue. So again, I think an 8%, 9% move is not ruled out over the next 12 months. But again, I think the risk reward probably from the current level would be restricted to those gains only.
8 to 9% could not be ruled out, but where are the risk-reward ratio? I'm going to talk about Sun Pharma now. I've got my colleague Shraddha, who tracks the pharma space very closely, joining us. Shraddha, dramatic on-call over the weekend, but people are fearing a Dr. Reddy sort of a repeat, but nothing as such. The warning letter seems rather benign, as Kotak was mentioning.
Absolutely. So the US FDA has posted the warning letter for Sun Pharma, and what is the good part is that the FDA has not highlighted any systemic multi-plant issue as we saw in the case of Dr. Reddy's, and the issues highlighted do remain confined to the Halol plant itself, and in fact most of the observations, if not all, are similar to the 483 that was issued earlier. Also, at an observation on accuracy of the dissolution methods, the FDA has stated that it would review the remedial measures taken on its follow-up re-inspection. In fact, the re-inspection statement is repeated again at another point of failure to monitor the equipment also. So it's a re-inspection now which is going to really determine the outcome and where the focus is going to move to now. So the good part is that there's not much divergence from what the management had said in their con call earlier. In fact, Dilip Sanghvi had said that the warning letter entirely dealt with the same issues that were raised in Form 483. He also repeated that the focus remains on remediation rather than site transfer for products, probably indicating that he was pretty confident of the remedial measures and efforts that the company had taken up. He had also said that the warning letter did not mention of any global third-party audit requirements, and the warning letter does not mention of any similar thing. So basically now there are reduced chances of an import alert, at least till the re-inspection is over, and any which ways analysts saw a very low probability of an import alert coming in. However, some relief or optimism coming in as far as Sun Pharma is concerned. In fact, we also have Kotak, and what they have to say is that the US FDA warning letter is as benign as it gets. In fact, no major data integrity issues or firm-wide compliance breaches were seen, and the warning letter was issued only due to the lack of updates that were received from the company, and they said that they see a minimal risk of import alert. So good news coming in, at least for now.
All right, Shraddha, thanks for that. Mayuresh, I want to come to you with Sun Pharma. How would you really weigh this out? There are obviously US FDA concerns that come in. It's also election year, which sort of raises concern for pharma as it does for tech companies as well. But it's a stock that's lost out from its peak quite significantly. Would you view this as a good investment point of entry for Sun Pharma, for someone who's looking to hold on to it for a longer period?
Oh, absolutely. And again, I think if one really goes by the Kuntor report, the warning letter probably are indicating in greater detail now. One really assumes that the import ban should not come through for Sun Pharma. And if that is the case, the hit of 10% on the EPS that most analysts probably had probably started envisaging, I think, would not come on the books. A lower part will be 8 to 9%. So to that sense itself, I think our take is that EPS for Sun Pharma should remain in that 29.5 to be kind of a band over the next 2 years. And clearly looking at their pipeline, the kind of discounting that one really does with all the news associated with the integration of Ranbaxy, the network costs associated with that, FY16 might be soft, but FY17 earnings will definitely be on the upswing. So clearly I think we are maintaining a positive view on Sun Pharma.
30% off from its earlier in the year high. Vaishali, do you see this as a technical breakdown, or do you see some momentum coming back into the stock?
Are you talking about Sun Pharma?
Yeah, Vaishali, I am.
Yeah, so right now we may say that, well, with a trading perspective, one can keep a stop loss at around 760 to 740 levels for a bounce coming up to 800 and 820. But on a broad base, if you say the stock is still running weak, but I think it's making a base at around 690 levels. So I guess one can accumulate keeping that in mind for a bounce back coming up to at least 900.
At least till 900, that's the bounce back coming in, maintain. The immediate target is 800, but stop loss coming in at 760. That's the call coming in from Vaishali, from Prabhudas Leeladhar on the technicals of it. A quick check on how Wipro is doing. Not very excited in trade. It's acquired a company, Vitos Group, if I'm pronouncing that correctly, for $130 million in an all-cash deal. Not a very big acquisition, but my colleague Rukmini, who tracks the IT space very closely from the Silicon Valley here in India, joins me from Bangalore. Good morning, Rukmini. Take us through this acquisition that Wipro has done.
Well, Anu, looks like Wipro wants to end the year with a big bang, and this, of course, acquisition coming in the BPO space for Wipro, $130 million all-cash deal, and this deal is expected to close by the end of this year. And also, given the fact that this is going to help Wipro in its capital markets processing part of it very strongly, VTOs has, of course, 8 offices worldwide, and this acquisition coming in the right time for Wipro when it is looking to kind of enhance its BPO services, and also strategically coming by for Wipro before it closes the year, actually.
All right. That's this story coming out from Wipro right now. Vaishali, how is Wipro looking on the charts for you? It's not one of the very well discussed IT stocks. It's always a tussle between the Infosys and the TCS, or the silent outperformer HCL Tech. Where does Wipro fit into the trading strategy?
Actually, Wipro doesn't show a very clear trend. So, if one needs to still buy, I guess 540 would be a good range, a good support. And once it crosses around, say around 560, 580 levels, then it may gather strength for a further upside of 600. So, I guess it should move in a very narrow range of 540 to 600, 620. That's it.
Mayuresh at Angel, what's the call in Wipro already? Where does the preference in the technology pack really lie?
From a valuation perspective, Wipro does appear very, very lucrative even at this point of time. But clearly looking at the kind of inorganic acquisitions that Wipro is doing, the kind of revenue guidance that the company has given, my take is that the stock might underperform. So in terms of the pecking order, I think Infosys, TCS, HCL Tech is what we probably got in the top 3 IT names.
Now, Asian Paints is the only stock in the Nifty which is in the red. 49 out of the 50 stocks in the benchmark index now trading in the positive. That's the only stock in the red as we speak. On the contrary, Berger Paints is at a 52-week high, 1.6% up in trade. But metals making a big move up. Mayuresh, you've got Tata Steel signing off a letter of intent to sell off its long products business in the United Kingdom. Stocks very excited about this news, up about 3% in trade today. But we've seen this before. You know, they've had 1 or 2 attempts gone wrong in the sale of these businesses as well. And metals is not, and steel is not an easy business to acquire, run, or even sell off at this point. How would you weigh out this news and Tata Steel as a stock right now?
Clearly, I think this has been in the news for some length of time, and even if it comes through, I think you're normally not going to see huge dynamic shift happening in the way the core business is functioning. Having said that, I think it will deleverage the balance sheet to a certain extent, but clearly I think the core business fundamentals in terms of volume growth and realization still remain soft for major steel players, including Tata Steel. So you're still expecting soft realizations to probably come on Tata Steel Europe operations, the Southeast Asian operations as well. And even on the domestic front, though you might see some uptick in volumes coming through, you've still got an issue to handle on the 1.5 MT of iron ore inventory that it already had. And again, I think the phased expansion of the Kalinganagar plant will take its own speed time. So having said that, I think my take is that realization is still remaining soft, inventory is still quite high, specifically in the Indian markets. Our take is that we are neutral. I think the stock might just peak off around the current levels.
Right. Vishali, tough to remember the fact that about 15 months ago, the stock was closer to 550 levels. It's nearly halved its value from that peak in September last year. How is it placed now after giving back 33% this year?
See, actually, the stock has been, consolidating at the 200 levels. So now we see that it has shown a good move right from 220. And right now, the level which we are at 265, it is a bit of a resistance level for now. But if it sustains, I guess this rally can take it further up to 280, 288. So I would recommend to keep a trading stop loss if one has bought at lower levels.
All right, pull up JSW Steel as well. That stock's making a bit of a move up, trading at the day's highest point now. JSW Steel alongside, there you go, 1.5% higher. Shrey Infra as well is making a move up as we talk. So the mid-cap movers that are on the buzz right now. Shrey Infra up 8.2% in trade now. And Trent as well from the retail part of the market is seeing a good traction in trade, 8.5% up. Mayuresh, any of these stocks on your radar? I know at the beginning of trade these weren't something that were in the radar, but Shrey Infra as well as Trent, would these be mid-caps that would come back into focus? Shrey, obviously, the tower talk always gets it excited.
Oh, yes, it does. It does. But again, I think we remain a little bit skeptical on how the business financials are probably moving around.
Okay.
So I think we'll be extremely selective when it comes to the mid-cap pack. What we probably like within the consumer discretionary space is something like a Bajaj Electrical or even a Surya Roshni. Within the mid-cap cement pack, JK Cement is something we're liking. Within the mid-cap pharma, it colors is something that we continue to like.
Bajaj Electricals as well as Surya Roshni. What is about the lighting space, Mayuresh, that's keeping Angel Broking so excited about it?
So for Bajaj Electrical, it's more on the E&P play. The E&P play is turning around, and probably if that happens, which it has successfully able to do that in Q1, our take is that the bid profit should be substantially higher by 17, close to 96 odd crore from losses that it is making currently. So E&P is going to be the main driver for Bajaj Electricals, and that's going to be the turnaround story, in my opinion, over the next 1.5 years. For Surya Roshni, it's going to be more on the lighting part, on the LED side. We're expecting revenues to grow from 100 odd LED segment to around 500 crores in the next 2 years. happily aided by their fans and the other electric appliances division as well. So clearly, I think cash flows from the lighting business, which has EBIT margins in excess of 10.5%, will support the overall consolidated financials. And clearly, on a valuation perspective, both Bajaj and Surya Roshni look extremely attractive at this point of time.
In fact, the government's big push on LED lighting as well is giving quite a fillip to some of these stocks. If you look at what Surya Roshni's done on a YTD basis, up 45%, almost up in trade so far. And Mayuresh there saying that the lighting segment there, Surya Roshni as well as Bajaj Electrical continue to be in the radar. Vaishali, if you've had time to look at the Shrey Infra or the trend chart, anything looking exciting to you?
I just saw Shrey Infra. I guess I would just take it as a momentum call and maybe look for a target of around 53 to 55 levels from where it is right now.
Right. Welspun Enterprises is looking to sell off a project, a Devas Road Corridor project for itself, and the stock seeing extremely good volume in trade today and a good upswing as well. Mayuresh, these road sector companies, be it being able to pass on projects or really gain momentum in order intake as well, 100% up year to date for Welspun Enterprises. What would you recommend to investors at this stage?
So clearly, as a disclaimer, we don't cover that, but clearly I think the stake sale has a positive tone to it. But clearly, I think what we would prefer at this point of time is something like an NBL Infra, which is a mix of both EPC as well as spot projects. And the management has made it very, very clear that the kind of order wins that it expects is anywhere to the tune of 3,500 crores. So if one really expects order wins to the tune of 2,500 crores, which will take a very conservative view of the next 2 years, our take is that the EPC business should do extremely well. Even if you give an EPS of 26 and a forward valuation of 9 times, you're probably getting 234 rupees on the core EPC business. And if you add to that the bought projects which are yet to get operational, 3 of them over the next few quarters, they would have impressive equity IRR because they're in mineral-rich regions, and again, I think the equity contribution is very, very minuscule. So NBL Infra is something that I like probably, which is a mix of both EPC as well as spot.
All right. Vaishali, Welspun has been stuck in this 54 to 56 range for a really long time. Is there a reason that investors should look at this bounce right now, or do you think that unless it really crosses over some of those critical resistant marks, it's going to be in a sort of a stuck range for a while?
Welspun is just consolidating maybe at the moment, but I think one should take a chance, because the risk reward would be pretty much favorable with a stop loss of around a little below 52 levels. I think if this stock catches momentum, we would see a rally going up to 65.
All right. In fact, before I get to some of the other mid caps as well in focus, let's hear about Amit Harshekar, the Chief Technical Analyst at A+ Analytics, also is putting his bets on.
My first recommendation for today would be going short on Lupin. Now Lupin has already gone through phase of distribution. Major short positions has piled up between the price of 1820 to 1830. If you see long-term chart of Lupin, it clearly indicates major distribution has happened. Stock has already given a topping out signal, so we would recommend going short even at these levels between 1790 to 1800, maintain stop of 1840 and try to play for target of 1690. Second recommendation would be going short on State Bank of India. Although we have seen good outperformance from Bank Nifty, but stocks like State Bank of India, PNB are clearly showing weakness at a higher levels. On the daily chart, State Bank of India now is showing a breakdown from an head and shoulder top pattern. Neckline of this pattern is prevailing at around 231 to 234 zone. We would recommend going short in State Bank of India below 230 levels. One should maintain stop loss of 239 and try to play for target of 204 to 205 on the downside. Third recommendation would be going long on Bata India. Now Bata is showing good amount of accumulation in last few trading sessions. The stock is unable to form a lower low, and that means a lot of buying is taking place between the zone of 488 to 490. For a high risk trader, we would recommend going long at these levels because the stock is a defensive. One should maintain a tight stop of around 468 and try to play for a target of around 520 on the higher side. Last recommendation would be going long on ITC. Although ITC has been into selling pressure in last 2 days, but the trend is indicating that major support for ITC lies between the zone of 311 to 318. We believe stock is unable to unlikely to go beyond below 380 in the coming days, because that turns out to be the neckline of larger inverted head and shoulder pattern. We would recommend to go long on ITC even after current decline, and we would play for a target of 338. Stop loss for your long trade would be at 308 on spot basis.
Ashoka Bilcon, meanwhile, has received a letter of acceptance for a project in the Belgaum district of Kognoli. We don't have the financials of it, but they're going to get toll collection contract for the project. It's a one-year contract that they've got for the Kognoli toll plaza. This comes in the Belgaum road. 3.5% for Ashok Bilcon. Meanwhile, you had commentary coming from the Defence Ministry as well, was looking at doing ease of doing business better in India, also looking at some of the offset norms to make it easier for defence deals to go in. Pipavav Defence in focus today, 2.5% up. Vishali, 100% up for Pipavav Defence in the year gone by. Is there still more momentum? There's an open offer underway as well for it, but a big spike over the last 2 months in Pipavav. Would you think it sustains out?
Pipavav has already shown good momentum, so now it needs to cross 85-86 levels. So once if that is happening, then we are looking at a further upside of perhaps 90-95. So it would be again a trading call with a stop loss, because it has shown a good momentum right from 70 levels, and now it is nearing the resistance.
All right, I'm going to reiterate that on the technicals. Jafish is saying hold on, Vaishali saying hold on. The target comes in at 90, stocks currently at 82, and a stop loss of 76. Mayuresh, defense has been a big buzzword. We've got Prime Minister Modi in Russia, and that's really the hub for all the big defense deals also to come through. How would you play some of these stocks, such as Pipavav Defense, that are at the forefront of the defense dream for the government when it comes to FDI and ease of doing business?
Really, what we prefer probably at this point would be something like Bharat Electronics, and clearly if you look at their order book, it's quite reasonably expected to grow at a very decent pace, with orders expected to come through from the Defence Ministry. Again, a very healthy balance sheet, and again, once execution starts improving over the next few quarters, the return ratios would definitely be on an uptick. So clearly Bharat Electronics at this point of time is something we're preferring from this space.
Mayuresh, looking at the two listings today, I can't ask Vaishali that, as the charts and technicals don't apply to the short term. Dr. Path Labs, you were a little skeptical on that going into the IPO as well at Angel. How is it looking now with the listing, the late trading gains that it has seen? What would you recommend to investors at these levels now?
No, clearly I think it's a cash-rich company, 148 crores worth of cash on the books, niche business in the listed space. You're probably even looking at expansion happening across the length and breadth of country. But clearly valuations is something that we're still not very, very comfortable with. On a trading basis, trades around 41, 42 odd times, which we believe is a tad bit expensive. So we will wait for declines onto the counter before we suggest any accumulation.
All right, 741. A quick check on how Alchem is doing as well. In trade today, 1,050 was the issue price, and a stellar listing for that one as well. You've got 31% up, 1,383 rupees for Alchem Labs. Vaishali, on the banking side, is there anything looking attractive to you on technicals within the, not the bank Nifty, but the larger range of banks, especially the mid caps? Anything standing out for you?
I think like banking sector on the whole now should be in the phase of bottoming out. So I would like to pick Axis Bank. Axis Bank is showing a steady move. So Axis Bank would look promising, and also ICICI Bank. As far as SBI is concerned, I think still the trend is pretty much weak, but I think it should have a good base at around 215 levels. So for a longer period, longer time frame, I think one can accumulate at these levels.
Vaishali, what about some of the smaller banks, such as the DCB, which has fallen considerably from its peak in October, but has seen a bit of momentum coming back? How would you play that on the trading strategy side?
Well, I have recommended that because if we've been seeing this stock since a couple of days, it has been consolidating between 78-80 levels, and today there is good volume, good pickup shown. So I guess this is ready for a bounce back, at least up to 88 to 90 levels.
But where would you recommend the stop loss to come in? Because this is a counter that has been quite volatile in trade, falling from the top in October.
Stop loss would be 78.
Okay. Stop loss would be 78. That's a buy coming in for DCB Bank from Vaishali Prabhudas Leeladhar. Stop loss at 78, but a target of 88 likely to come in on DCB. That has shown some momentum after quite a while. Mayuresh and Vaishali, thank you so much for your time today on Market Movers. Meanwhile, it's a wrap on this edition. Here are what Nikita Sureka, technical analyst at kailashpuja.com, makes of these markets and their topics as well.
Well, I have three buy calls for today's trading session. One would be Alembic Limited. If you see, this stock was showing good upside movement in yesterday's market, and it was showing a good upside traction. It has also posted a good breakout above 45 levels. So I'll be buying this stock with a stop below 44.80 for a target of 50 to 51. My second call would be on Sun Pharma. After the US FDA warning, we saw a gap down opening in this stock, and after that gap down opening, this stock has been constantly moving up and has been showing a good buying interest at the lower levels. So I think this upside will resume further in today's trading session. Buy with a stop below 752 for a target of around 784 to 788 on the upside. My third buying call for the day would be Rallis India. Well, this stock, if you can see it has been quiet for quite some time now, and of late, in the last 3-4 trading sessions, some volume activity has been building up in this stock. Technical chart is also showing that it is building a base at around 162 to 165 levels. So I think this is a good time to buy this stock. I'll be buying this stock with a stop below 171 for a target of 181 to 183.